All right, so what kind of a trader are you? After mentoring traders at our firm since 2005, we've discovered that nearly every one of them falls into 5 distinct profiles. But here's the critical part. Only one of those types has the DNA for the best chance of success. Today, we're pulling back the curtain on these 5 trader types. You'll find out which one you are, and we'll give you the roadmap to become the one with the highest potential for success. I'm Mike Bellafiore, founder of SME Capital, one of the top proprietary trading firms in the world, where we've developed 7 and even 8-figure per year traders, and you found the right place to learn how they do it. Let's find out what kind of a trader you are.
Every trader's heard it. Figure out what kind of trader you are and success will follow you. The problem is most people guess. They try to be everything. They try to be a scalper, a swing trader, a trend follower, a reversal sniper. They try and be everything all at once. And what they end up building is a confused mess of half-baked edges. But what if you could understand your trader type? Not just from a personality test, but from the trades you actually take or the trades that actually make sense to you. Today, I'm going to introduce you to 5 very real types of intraday traders based on real people on our desk. And we're going to walk through how they think, how they trade, and how they win. And at the end, I'm going to reveal which one is growing the fastest on our desk. You might be surprised. Let's start with the first one. And let's say you like structure. You like quiet mornings. You like routines and returning to familiar territory. You believe markets revert, that every imbalance finds its way back to balance. You're the kind of trader who doesn't just analyze your favorite names, you know them. You know how Tesla breathes at 9:45 in the morning. You know how NVIDIA reacts after a $2 pull-in. You know the feel of the tape like it's muscle memory in specific stocks. So if this is something that you think of, if you gravitate towards a core group of names, you're likely a ranger. There's a trader on our desk who every single morning starts with the exact same 3 tickers. He has levels mapped out from days before in those 3 tickers. He gets active at key times in those 3 tickers. But this trader has a real danger, which we're going to highlight in a second. To be successful, the ranger always trades with really defined stops. He has to, and we'll talk about why. But he almost always is in the same couple names. What names is he trading? They vary a bit from ranger to ranger, but most commonly, you'll find a ranger trading, guess what? Tesla, NVIDIA, PLTR, and maybe SPY. If they're trading options, definitely SPY. The ranger doesn't really care what stock's trending on X or is being pumped on Wall Street bets. He doesn't need to. His edge lives at the edges. So why don't we drive to the edge with the ranger and see exactly what he sees? So I want to tell you about this one morning. Tesla dropped into this zone. Ranger gets filled, sold right into the push, flat within 5 minutes. It wasn't dramatic, but it was precise. He made his day before most people even opened their watch list. To an untrained eye, the trade he's looking for, and he's always looking for this trade, seems to be risky. It seems to be almost random. It seems like he's just randomly picking spots, and somehow the stock seems to turn there often. Is it? Perhaps, but it turns so often at the levels he's identified. What's interesting is the ranger's most often executing a stuffed scalp into an area of support or resistance that has a decent amount of significance from prior days. You see, most mega caps, especially the names we mentioned, have some sort of catalyst every single day. They always have a news catalyst. But most days those catalysts aren't enough to get the stock really moving around that much. It moves around just enough, but not nearly enough to break the stock out of its current trading range. Even though there's a catalyst, it's not significant catalyst. It's not one that's going to change the story of the stock. The other thing is these stocks also have crazy amounts of liquidity in the options and all sorts of participants who are selling the premium in these options, especially following a fast move in a sustained range. Those participants profit from this strategy. In fact, most premium sellers are rangers at their core. We all know there are times that it ends so badly for Rangers. But before that, let's take a look at a trade that a Ranger loves. Most of the time it works because to the Ranger, a fast move into a key area is an opportunity. And he can look for the change in the tape at the edges of the range, most often in the form of like this pattern that's called a spray, a pause, a press, and then a drop. Or a spray, pause, press, and then step up. This tape action signals to the Ranger that there's a good chance the stock bounces or fails and gives a quick edge for them to take a trade. Even while the stuff scalp looks for the reversal candle to close below the open of the prior candle, and then looking for that stock to go and give you a continuation of the downside. If that happens, that's the official stuff scalp. But the Ranger's watching that small group of stocks and so can quickly get a feel for the normal tape in these stocks and then normal moves in these stocks. The Ranger's going to be reading the tape right at that key moment and look for that really clear pattern on the tape. And then where do they cover? Simple. The Ranger usually takes like a 2-to-1. They really don't care about what happens after that. They caught that move into the level and that move away quickly. And that's it. Rangers can be really consistent, but they often have one total killer problem. And we should talk about something that happened this exact same week. So the stock that we just looked at, that we just saw this perfect Ranger trade, looked like it was doing the same normal thing the Ranger looks for. But this time, the Ranger got an ambush. And what's worse, Rangers often have a super hard time adjusting to the opportunity when it changes. You want to see what we mean with a change? The stock went up into resistance quickly, sprayed up there. It paused. But instead of pressing higher, where the late buyers are chasing, trying to break the stock out, but then they're also setting themselves up to be stuffed, the stock drops out. This gives the Ranger kind of this false sense of confidence. You want to see what I mean? You might already even know what's coming. You see, Rangers make their monies by stock ranging, which a lot of stocks do a lot of the time. They trade in ranges. But when this rebid happens, and almost immediately, it's showing the character was different. There were new players that had stepped in, and because of that, this stock was different today. It wasn't the stock it usually is. It was trading differently. And you can almost start to feel how bad this situation is going to get, right? The Ranger was so stuck in this idea of the trade working that instead of saying, wow, that's different when the stock rebids, they dig in a little bit more. They actually get caught a bit off guard, and oftentimes the Ranger's going to get a little tight. A dangerous thing is going to happen. When the flight part of their brain should take over, actually the fight part steps in and can cause a big, big problem. Rangers are known for trading with stops, but often taking stop after stop when a trade doesn't work, or even worse, the trade starts to work and it goes against them fast. In this case, the Ranger wound up fighting it 3 times, and instead of catching a clear trade on the range break when a new set of traders were involved in the stock, the Ranger was looking for the stock to just range. It's this blind spot that can totally crush the P&L of this type of trader. And even worse, it can crush their psychology, because one bad trade quickly can erase 2 or 3 or 4 good trades that work out. But that's the Ranger. They're methodical, controlled. They're great in balance, but what happens when the market breaks out of range? Our second trader is the builder. And maybe you're not about control. Maybe you're about momentum, but not the kind you chase. You want to build into it. You don't need to be right immediately. You need to be right eventually. And when you are, you start to scale. You pyramid. You layer size on strength like bricks on bricks. So we had this trader who saw a backside setup in AMD. Started small. Stock started to flush. He covered a little into his initial target. But where most people are covering all of it, he was starting to think bigger. The way that stock traded and the setup it was giving him, that intraday overextension with a slight higher time frame overextension, gave this builder a reason to really look for more. So he did. Stock popped up against him. But it didn't pop enough. And as soon as he saw the sellers come in, he was back into full size. Then it went lower, and it held lower. He was adding again, where lots of other types of traders are scaling out of the position, reducing their exposure, thinking the trade's starting to be over. The builder's actually looking to add another level to this trade. The foundation was laid. The first floor looked good. Let's add another floor here, he's thinking. When there's a little pause, even after we get that close to his best case target, and that pause doesn't go against him, he's adding again. When it's all said and done, he's like 5 times the size he was in the initial trade, all the while lowering his risk, even as the EV, the true expected value of the entire trade, seemed to be decreasing. And what we mean by that is even as the probability of it continuing to go lower is slightly increasing, the risk to reward, how much, even of open P&L, but how much he's risking relative to how much he would make was actually decreasing. So that's reducing the overall EV of the trade. We can unpack a little more on EV in a minute, but the builder always sees the potential and he wants to keep building. He wants to be biggest near the end. He wants to risk his open P&L the entire trade, always working to try and get every last drop of juice from the fruit of every single trade. We've all heard the trading expression, don't turn one trade into two. To the builder, this is total nonsense. The builder doesn't really believe that. At its core, the builder believes that if it's there and if it's right, I'm going to push it hard. At times, the builder even seems to get the juice out of like 3 fruits from a single trade. At other times, the builder has a great trade but gives it all back. The open P&L swings of builders can be so nasty. Most traders with these swings feel like they need to shy away from giving back open P&L. But deep down, real builders don't believe that at all. If they try to change their trading, if they try to protect their open P&L too much, it actually hurts them. Their wires kind of get crossed. What naturally makes sense to them, to their personality, goes to battle with what they hear is the right thing to do. Their growth gets stunted. He starts to feel a little lost in his trading, and FOMO, which is really what the builder lives off of, which is what makes the builder capable of taking such incredible advantage of the opportunity, starts to work against him. When this happens, the builder will start to build the wrong way, not adding to winners, but instead giving things too many attempts before they actually set up, or worse, digging deeper and deeper in a trade by scaling into the trade as it goes against them, instead of when it works in their favor. The psychology of a builder is different from almost any other trader, and they must be proud of that fact. They see opportunity where others see threats, but the builder can be subject to not only giving back open P&L, but can fall so much a victim to FOMO, leading to predictive trading and giving it too much risk before the real trade works. That's the builder. They grow their edge with their position. They can build this beautiful, incredible trade, but if they build too soon, the entire house comes down. With this next one, we had the initial name the Chaser, and people really didn't like that, so we changed it to the Closer. There's this one trader who's kind of a cousin of the builder, but he has some totally unique characteristics, and this is the Closer. You know that guy that always shows up after the big move has started? Maybe it's you. The Closer's not on the scanner at 8 a.m. The Closer's not dissecting daily levels. The Closer is feeling the market. You're watching for that breakout, that energy spike, and when it comes, you hit the button. So there's a trader on our team who didn't touch a name that was in play all week. On the morning of this trade, the stock already made a really good move. It went up to the highs. It already pulled back. The Closer wasn't interested in that. They waited for that bounce to occur and then one more consolidation to happen. For most people, the trade's already played out. It seemed like to others the game's almost over. But to the Closer, this is where the move can really get good. This is where the opportunity really shows up. The Closer might miss entirely what other people see, but the Closer believes in the saying, the wagon wheel's running fastest at the bottom of the hill. The Closer gets involved where velocity meets opportunity. To the Closer, the trade was just building momentum this entire time. And although others thought it was extended, it just kept looking better and better and better. The closer's going to be there with size, late and with size. Now, to a lot of people, that sounds like a recipe for disaster, right? But not to the closer. The closer looks for extreme and then expects it. The closer actually bets that it will get more extreme before the move ends. The closer almost always has what we call a really big imagination for where moves can go. The closer's rarely going to say things like, this stock should just go to here. Instead, the closer is going to see that stock that's already gone to that level, see the way it got there, see the way it pulls in and resets, then see the way it comes back up, and then think, this thing should really get going now. The closer's never the person who's going to go see a movie on opening night or go to an artist tour on opening night. But as the momentum is built, as the proof of this thing being something special comes in, the closer's going to be the person who's going to go pay up and go see Taylor Swift in Indianapolis when she closes out her whole Eras tour, right? They're going to let all the momentum build, and they'll be there late, and they'll be having an epic time. The closer's going to be there because they're going to wait for all the momentum to have built, to be sure that they're there when the momentum is really at its potential peak. The closer's going to do things others won't. They're going to buy a gap up in a stock that's already at 75 RSI on a daily, and then there's a fresh news catalyst, and everyone is thinking it's a sell the news. That's a closer's dream. The closer's going to hit a stock that's down 4 ATRs in a day because it's holding the lows and should show some more momentum into the close. The closer's going to be there when the momentum is there. The question remains, can a trader who reacts ever get ahead of the market, or they're always kind of one step behind? That's kind of the closer. They're never early. They're always late. And when they hit it big. But most closers have a really, really tough time when the chasing stuff's right in their face. They know they're late. They know what they're looking for. But there are going to be times when what they're looking for is just not there. Or worse, it starts to show up, but then reverses quickly on them. Closers do not adjust well. When they see what they want and they're ready to be in, and when it doesn't work, they have a really tough time admitting it. In fact, they'll often know they're wrong really quickly. They'll know the trade isn't going to be right, but the closers freeze more than any other group of traders. They have to be a believer. That's what makes them a closer. And because of that, they often struggle to admit when they're wrong. They get in with a rough idea of a stop or even a clear idea of the stop, but then when the price action starts to work and then comes against them quickly, they tend to freeze. Then there's you, the chaos trader, the one who thrives when others panic. You're the superhero. You don't need a level. You don't need a setup. You need volatility. You need noise. You need speed. That's where you start to focus. I've seen one of our traders do things that should be impossible. Long into a random halt, out on the open, then short on the reversal, then long again into the reclaim. It's like watching a firefighter run into a burning building and come out with the treasure. This trader will be so aggressive, but they always seem to be aggressive just at the right time. This trader almost always seems kind of bored when things are slow, but when things speed up, when things get volatile, when things get extended, this trader isn't there some of the time. They're there all the time. And then after the trade's done, they retreat back to their secret hideout to recover and wait for the next signal. These superheroes use technology to help them find the trades they want to see. And they're often absurdly systematic until they're not. This trader loves rubber band trades. They'll sit there and let things get extended. That's the signal. Then more extended. That's the opportunity. Then when they see the moment, when they see the change, that's when they're in. That's when they switch from systematic, from observing, to superhero. They're not just in it to be consistent. They're in it to play. If this trader sees the turn, they see the buyer step up, then they're in and they are aggressive and they're going to stay in it. The key with the superhero is not the fact that they see the turn. It's that they see the change. It's that they see it and they know what it could mean. They're always looking for one spot, one key, really high EV moment to get their risk on. One chance to be a hero. And they'll step in and they'll take it. But even more, they're going to hold it and they're going to stay with it. They'll live in the glory of that moment as long as it stays there for them. Sometimes that moment's so fast, it can last seconds or it can last hours or even days sometimes. But they're going to be there and they're going to let that moment be there for them. Before the superhero takes a trade and when they're not trading, they better be training. And not training by taking other trades, training by actually passing on lesser trades. Passing on other opportunities that aren't as good, that are not as clear. If they don't, they're going to get caught up in death by 1,000 cuts. These traders are always training but acting less. They're training themselves to hold their winners, working on techniques to stay at the best trades. They're developing technology to find the opportunities they want to see. They have insanely high idea generation numbers, but very limited action because they know if they get burnt out trading, they're not going to be there when the trade is great. They won't be there when it gets really good, and they'll just make mistakes at times that they don't want to make them. That's the superhero. The bigger the fire, the more focused they become. But their strength is also their trap. Our last type of trade is the surfer. And maybe you're like this. You're patient. You wait for the wave. You're not trying to win every battle. You're trying to find the setup and the trade that aligns with your rhythm. You don't need 10 names. You need one theme. You need one story. You need one perfect wave to ride at a time. So one of our traders built a playbook of 2 trades, and then 4, and then 5 or 6 trades. He'll float around looking for an opportunity in any of these plays. He has no problem trading short, and then long, and then short again, and then even long again in the exact same name, simply because his playbook keeps getting presented to him. He kind of makes trading look slow and methodical, taking ride after ride. But all of these are so super calculated. He'll move around without an opinion of what is the best, but with a clear idea based on his playbook of where the edge is getting presented. When he finds a stock that's moving around well, he'll just stay with it. He'll just see one trade, then the next, then the next, then the next. He'll just enjoy the ride while it's there and then move on. No one saw it coming. He didn't have to risk much at any point through the day, but he was able to just float in and be there. He was able to just enjoy the op and keep adding to his P&L over time. The surfer's so diligent with his opportunities, but after the close, the surfer's always working on his trading. Surfer's always studying. Again, after hours, not during the trading day. When the op is presented, he's present, and he's present through the whole trade. He's just enjoying the chance to test his playbook. He never really looks at his P&L unless it's kind of to check how much risk he should be applying to the next trade. The surfer doesn't really care about the P&L as much. They're a little detached. It's just always about the next wave. That's all that matters. And all that matters to them is what does the next wave look like. At SMB, we've seen this type of trader grow the fastest. Not because they're ever risking that much, but because they're always ready to put some risk on. Because they're always refining and building their playbook. They're always working on their trading. They view it as a chance to play, not to force anything, not to make money, but to play. They might start by just enjoying the ride of one trade, but they want to keep growing. They want to be there in the best trades. And all the time, they want to enjoy the ride. So you might see yourself in one of these traders, maybe 2, maybe all of them. But the truth, the fastest growth doesn't come from being everything. It comes from leaning into what you really are. These stories are about traders who ride their strengths, and they stop trying to be everything all at once. We might say the surfer grows the fastest because they understand the rhythm of the market. They don't force risk ever. It's not a game of being perfect. It's a game of getting better. They find the wave and they ride it with humility and confidence. But you might not be the surfer. So which one are you? Let us know in the comments and then go out and master the type of trader that you are.